Okay, we're live. So, welcome everyone to the first Fintech Book Club of 2025. Um, we're recording on January 17th, 2025. My name is Stessa Cohen. I'm here with my Fintech Book Club members, Jim Perry, Barb McLean, and Effie Pilot. I forget Pilarino, which I get wrong every time.
That's okay, Pilarino.
So this month, we're reading Banking as a Service, Opportunities, Challenges, and Risks of New Business Banking Models by Jason Mikula, friend of most of the people in this book club.
Yeah, yeah. Who, who,
And
who, who is very well known over the past couple of years for his amazing work in the area, in the intersection of regulation, compliance, fintech, everything, right?
yeah, yeah. So I want to encourage people can ask questions and we will answer them and make comments, whatever suits you if we're able to. Um, so please feel free to engage with us, interact with us in the comments or after we post the video. Happy to do that. So let's not waste any more time and just get started because this doesn't look like a big book, but it's a big book. It's got a lot of stuff on it. So I think the first place that we want to start is like defining, as he does, what is banking as a service and how is it different from embedded finance?
Actually, I thought that that was a brilliant juxtaposition that he made at a certain point in the book, sort of putting them in context. Yes, they are linked, banking as a service and embedded finance. And I realize that, including myself, sometimes we don't use them correctly. And what Jason says is that you can think of banking as a service as the how things are happening, how you can get financial products and services at the point of sale or wherever, in the context of having banking everywhere. And the embedded finance is the what type of product, what type of service. So you can think of it that way. And of course, it gets more sort of subtle because in the different regions, we have different licensing and regulations. And therefore, when do you need a banking license to embed some functionality may vary. But that's really the distinction. And I hold it, very clear after reading this book.
Yeah, yeah. I think that's important. That's really important because I remember, when fintech was new, the definitions around what is a fintech and everything became a fintech. Everything from Fiserv to whatever just started yesterday. So the definition lost some meaning for me, just because everything was a fintech. So everything isn't. And he points this out later in the book when he gives examples from other regions. But I don't want to get too far ahead of our discussion. So that's
Let
why
me,
I think the definition is important. Go ahead, Jim.
yeah, let me add to that simply by saying, Effie, you make a really brilliant point about setting that distinction out really early, because I do think in the industry we tend to kind of almost use them interchangeably at times
I
and
do.
often in the wrong context. So the very fact that Jason kind of starts out with this and makes sure that he establishes that banking as a service is the underpinning of embedded finance. Thank you. Thank you for layering that out there. But it also reminds me that, the reason why this book, I think, has gotten so much attention so quickly, I noticed on Amazon, it's already the #1 book in banking. Congratulations, Jason. This is amazing. But it's mostly because Jason brings such immense knowledge to the topic. I mean, the fact that he's been doing the Fintech Book Club or the Fintech Business Weekly for so long, and putting so much information, his understanding of this issue is so immersive and immense, and it needs to be, because to me, this book illustrates how complex this topic is. And it's actually given me more questions than answers, I think.
And I think one of the places of complexity is in the United States. And it's not just because it's maybe has the most financial institutions, but because of the national versus the state, and all the well, we can get into it. Some of the craziness, the business model that has risen to the top, and I don't, So I think one of the things that he spends a lot of time on is the interchange revenue business model and how that works, and that's not something that I have focused on. And if you ask me the different revenue rates in every country, I would look it up in here. Because that, it's hard to keep that in mind, but it's really interesting to see that this interchange revenue model for fintechs has driven fintech growth and development, but it's also developed a business model that is challenging, to say the least. So, what does that say to us about the evolution of banking as a service?
I really appreciated as well in the early chapters of the book, kind of the history of how that, solidifying of the current state of that interchange model got started, the history that brought us here. And for me, having jumped, south across the border from Canada into US banking over the last couple of years, I could have really used this book to educate me sooner,
Right.
than having to learn it by osmosis once I got there. So that was, I think, really helpful groundwork, for those that aren't as deeply in it, which very few are, and especially those from potentially other regions that, are only maybe seeing the news stories on the periphery.
100%. I in that context, the other perspective that Jason brings through the book is this thinking of what is the demand and what is the supply for banking as a service. I really love that. In this book, and we can discuss this later, it's a book that is definitely for bankers, for fintechers, for any practitioner in the market. But it could also be a brilliant book for business schools and understanding the market dynamics. So this, at a very simple level, he talks historically how the supply and how the demand came up. The demand is very interesting because it's really the period where we have a lot of funding for fintechs. I remember some numbers that I hadn't, kept in my mind, which was like looking at how things started booming in 2015, like 70 billion of funding for fintechs. And all these fintechs are the ones that really wanted to go fast to market, and they only cared about product and customer experience, and were really wanting a banking as a service provider that would take care of all the stuff that is not so sexy, right? And is not so customer facing. And then that he walks us through the history, how that changed when the funding dried up, and the customers of the Baas providers were basically the banks, or they tried to sell to the banks. So it's, I hadn't thought of it that way, that it's the Baas providers, their clients changed, and they had to change their technology, their everything.
Yeah. Well, this is why it makes it so valuable to technologists and to the business people, because it's not just, oh, here's this great technology and here's what it can do and isn't it great and here's the different use cases, but here's why it grew up the way it did. And I think one of the things that's not talked about is the venture capital funding of fintech. And from my perspective as an analyst who's talked to a lot of VC people, oh, should we invest in this? This is going to sound like a broad and maybe bad generalization. They don't necessarily understand what the technology can do, if it's really different from what the banks are already doing, and the drivers that he talks about in this book. I mean, one of the problems I think is the legacy core systems, right?
It's very interesting, I think, unintended consequence of the prevailing pricing structure. Like, forget the technology legacy capabilities for a second, just actually the business model of those core providers, and the fact that their tendency is to price per account on that core. And so then you're incented as, the bank paying that fee to have as few accounts there as possible to minimize your fees. And, law of unintended consequences being what it is, that evolved into the for benefit of structure. Hey, we'll just have one single omnibus account that holds all of the funds for all of the customers in this fintech relationship in this single account to help minimize the fees we're paying to our core vendor. And then all of the tendrils and threads that spawn off of that. So I think that's, that particular topic in and of itself is worth its own book.
Yeah.
He
And
does
that's,
a brilliant, job of showing in a very elegant way, without like taking sides, what are the new risks that were introduced through this new capability. Or rather, I mean, it's not really new, and he says it, but the architecture is new on the cloud, APIs, the middleware providers, and all that. That's more new. But I found it's now clear in my mind what the risks are. And we didn't think of those up front, or they weren't clear what they are.
Yeah, but now they are. So how can any, especially he focuses on the banks that are really into banking as a service, which is community banks. How can they afford to invest in this? Former community banker Barb McLean.
I would answer that with how can you afford not to? He also does a very good job of talking about just kind of the prevailing business landscape of banking, shrinking margins, all the rest. You have to be seeking to diversify your streams of revenue as a bank, whether you're a community bank or not. And so that's why this became a very interesting space for community bankers to look at. And I would answer if it's not this, it has to be something else. That business of community banking, the way it used to be done, is not sustainable, I don't think. So you have to look for something else. And clearly some have looked in this direction.
And I love the fact that early in the book, Jason poses this question. He said, is banking as a service, is it like an answer to community banks' prayers? And it's like, my first answer to that was, it depends on the bank. Right now, we often try to paint these kind of scenarios with a broad brush. And unfortunately, especially in the US, the industry is so complex, the banking industry, and the profile of community banks can be so different. You can have like a $400 million asset bank that's doing amazing things with banking as a service, and you can have a $3 billion asset bank that's really struggling with it because it's gotten way out of balance in terms of how they view their overall mission. And and they get very distracted, and they don't have all the talent they need internally to manage all the things they're trying to do with banking as a service. So, I mean, it's not just about the risks associated with it, it's the responsibilities associated with it that I often kind of counsel community bankers when they're trying to think about it. And I mean, I know probably a couple of weeks from now, Cornerstone Advisors, every year they look at the number of banks that are actually in this space, at least mid-sized banks. And it's always been a relatively low number. I've yet to see an accurate count. Is it 150? Is it 300? You know, how many banks are actually in the banking as a service model right now, utilizing it in some fashion? But even if it's 1,000, that's still a small number in the global
Yeah.
scope of things.
You know, Jim, one other point that stuck to my mind in the book about the difference between banking as a service and embedded finance providers, Jason says that the Baas providers, they're not providing products, right? You know, cards and this and that and the other.
Right.
They are providing basically what we would call the source of truth, their core banking and all those processes, right? So I assume, I don't know how Cornerstone Advisors does it. It's difficult to, know who's doing what and whether they are offering banking as a service. Barb, do you have any thoughts on this?
Yeah, I think your point about process is a great one. And I think, Jason Hendricks maybe had a LinkedIn post this morning about, bankers being in love with their processes, maybe sometimes for good reason and sometimes for not. I think that can be a bit of a trap potentially for those that are either seeking to get into or, inside of banking as a service, because, you have to make sure that you've evolved all of that to be suitable for this new kind of business that you're in. And I think the tendency can be to assume that, banking is banking regardless of where the customer is consuming it from. But, as we're seeing with, I think, repeated public consent orders, and if you read them, and there's lots of commentators out there that will help you digest them, you don't even need a GPT for that.
Right.
But it tends to be around, a few specific areas, and lack of process and procedure comes up again and again and again. So as much as banks, I think, like to think that they're very good at that, I don't think they're very good at evolving that.
Yeah. I wonder if this goes to, if you're going to adopt these new business models, that you also have to adapt your organization to all the risks of risk and compliance and fraud, et cetera. And he points this out. I don't think he's not like making a big polemic to banks, but he suggests that banks that are doing this have to really start to address internally how to deal with the risk across all these areas, the fraud across all these areas, and they can't depend on some middleware platform that isn't doing it, or alternatively, some middleware platform that addresses this could disrupt all these others that are challenging, and organizationally start to deal with this as well, because it's not just a business, it's not just a tech problem, it's a customer problem. So we have a question about interchange from one of our attendees. Is there enough interchange to go around? Doesn't increase scrutiny, increase cost for the bank issuer? And
I mean, I think, there's probably several ways to skin the cat in terms of how the banking as a service business model between banks and their fintech partners actually works. Maybe it is completely dependent on interchange. Maybe there's other elements to it. So I wouldn't make the assumption that it's purely driven based on that. It sure is a big part of it for many of the banking as a service providers, but it wouldn't necessarily be solely dependent upon that. But I think the point that Trent's making in that question is a valid one. Up until recently, I think the prevailing sentiment has been that the regulatory oversight is only ever going to increase. The number of new pages of laws and regulations that banking teams have to digest only ever gets bigger. And so remains to be seen whether that is true. But as that plays out, absolutely the cost goes up.
Yeah. Thank you for that question.
And obviously this is a big topic more in the US rather than outside of the US. The other way to think of this, the banking as a service operating model, first of all, it's clear that it has either 2 or 3 partners, right? You have the provider, a bank and a fintech, and then maybe you have the middleware provider. And a lot of the new risks in these new intermediaries, I like to think of them as new intermediaries, and because I find it a bit also ironic, because fintech is all about disintermediation, and here we are with new intermediaries, right? Of course, for new business models, but they are intermediaries, so therefore we have more reconciliation risks. Jason talks about that clearly, and we've seen the nightmares in the recent Evolve, Synapse situation, and more cybersecurity risks that are introduced, and the question that comes up is the economics, but also the business risks. How do you balance those, and does it depend on each business case? Are we going to have BaaS providers that are a few of them and they're large? These are big questions that are open and not answered, right?
I myself have wondered if there's another sort of unintended consequence coming at this part of the landscape following what happened with Synapse, in that I think more of the fintechs in the banking as a service or embedded finance relationships will be looking for multiple bank partners. That had been true, prior, but I think it's going to continue to accelerate for them to de-risk their position in the relationship, which in turn will further, in my opinion, exacerbate these kind of reconciliation risks and problems. And it comes back again to the core banking vendors and products. They were never built for this. They weren't built for a lot of things. They definitely weren't built for multi-tenancy reconciliation. Right. And so as you try to shoehorn multiple bank partners into a single core, I think you're going to continue to see problems in that kind of area.
Barb, to your point, one of the things that Jason's book kind of shined a little spotlight for me was on what's it called? Column Bank. Again, where you've got somebody who was at Plaid first, comes in, buys a community bank, totally refashions it to now serve in this complete, not middleware, it's an actual bank designed to serve directly to developers, fintech community. Part of me wonders if we're going to see a little bit more of that kind of scenario playing out over these next several years, where folks who have been in fintech are saying, okay, here's this little community bank that's ready to sell. I'll go in and reinvent them and then offer banking as a service to the plethora of fintechs that need us. What do you think?
How many of those do you need?
Right.
How many of those do you need? I know Arkady Lapiro always points out that there's too many BaaS providers and few clients, and I don't know, are we going to see more fintechs, funded fintechs that need these types of services? Let's not forget that we're at a point where it's more probable that we'll see funding for new fintechs, a new cohort of fintechs that are really AI native or agentic AI powered. And I don't think that these Baas providers can really get them to market fast. They're going to go to market with infrastructure that really doesn't come from the banking sector. So it's this question of how can we gauge the demand really, as Jason would say, what is the demand for Baas? What will be the demand for Baas going forward? Will it be from fintechs? Will it be from banks? And then I don't know if we even call it Baas, if it's just a software, another software vendor type of situation.
Yeah. Yeah, he suggests to me in the book that it could go, a couple of ways. One is more banks acquire fintechs, right? So it just makes sense at a certain asset size to just acquire the fintech, and then you can control it, right? Or banks, financial institutions just develop their own. Kind of back to the past, right? We just develop our own, and then we can control everything or pretend we have control everything on our legacy architecture, and we don't have to confront the real problem, which is this legacy core and other infrastructure systems that, as Effie mentioned, not made for this. It's like using ACH for all these kinds of transactions it wasn't designed for, and then oops, something happens. And it's like, oh, it's a problem not of ACH, but of how we're using it. It's not that there shouldn't be new use cases, but in the end, I wonder if this could just, like, in some ways stymie innovation in fintech. Certainly from the US perspective, because I think, as we move towards it, I think there are other ways to do this that other regions have shown us.
Stessa, you remind me that one of the things that I really appreciated was this book, that it wasn't just US centric, that it really gives enough of a global flavor of what's going on in banking as a service to kind of help us evaluate and gauge, perhaps here in the US, what can we learn from what's being done in the rest of the world? Where are we going with all this? As I say, there are more questions and answers to that particular topic. So,
yeah. One of the best sections I found is subsections where he asks the open-ended question whether these operating models, the business models of Baas providers, are long-term sustainable. Without, the current conditions don't show that the middleware providers are at risk, a shrinking space. And then, do the Baas providers have new clients, and is there demand? It's an open question, and it depends on other factors too, especially again in the US, which is the big market. I like the fact that he doesn't take any side. He's managed to be very neutral. I found I didn't feel that he was trying to sort of express an opinion, a strong opinion, and I'm sure he has some opinions, but I found that it was pretty balanced, and it's more really the tricky question about how you balance at this stage innovators that are breaking and going fast, and the risk management practices that you need, that Barb is very more familiar than all of us, having been in the trenches.
Well, I think we've got an interesting question from the audience sort of on that vein. And Jazz is asking, maybe do we just need one new provider to rule them all here? And part of me really likes the idea of that, because having been in the trenches, as Effie says, one of the things that I felt was really important was removing complexity from the environment, because handoffs between teams, or those spaces between systems, those are the danger zones, for any organization, but especially one that's already fraught with enough other complexity in its business model. So that's a very attractive idea. But on the other hand, does that just bring us to the new Fiservs and FISs of the world, where, you're completely dependent on one provider to, rule your world for you? And I think, Stess, it was you that was saying earlier, feels to me like the banks really want to be more in control of their own destinies than that.
Yeah. I think it's the question, especially when you have the middleware platform players. And one of the things, as we were mentioning, the differences that Jason lays out in the way, and this goes back to the other book that we read by Ghosh around innovation, right? And fintech innovation, that in some ways, this innovation in the US around Baas is more around how do we get around the legacy core problems that we know we have without addressing the issue, right? And this kind of goes also to Lita's book as well. How do we get around that and pretend, okay, that's a judgment, but innovate at the same time? And there are things that can happen outside of banking in the government to promote innovation, in the technology vendor space and the regulatory space. I mean, each of the examples that he gives outside the US, where there are multiple kinds of financial services licenses, the problems around the risks seem to be lower. I don't know if that's accurate because this book is only a slice, but it seems to be where there are some of these other things in place that, because in the US there's really no payment or e-payment services that you can become. You can become there's an industrial bank model, but that's not nearly what we're talking about. So I think, there's this tension in this book around, yes, this interchange dependency of fintechs is driven actually by the VC funding and the need to make money, and the adoption of it, the model is driven by, well, we can't get rid of our core, for various reasons, no judgment, but, I wonder what's gonna happen. And this isn't banks just in the US, there are banks outside the US that are wed to older cores as well.
Yeah. So if we think of the train that we're all on, which is, the transformation of financial services, and Baas is one wagon, it seems that it's gone through hell recently, right? And maybe it's smaller, or it doesn't know exactly in what order it is. It's second class or third class, but that doesn't mean that it will go away. That's, I guess, how Jason finishes the book. I don't know whether.
Well, it's interesting, Effie, because using that kind of analogy, last year, I mean, we had one train track going along enforcement actions, and you had the other train track, at least in the US, where all the banks were looking for deposits. Give me deposits. I need to find deposits. Give me a new revenue stream. But unfortunately, those two tracks intersected, and it just brought it all to a crashing halt. And so now, at least here, we're in that place of trying to sort out, where are the opportunities, where are the risks, who goes where and when and how, and what do we need to consider?
And something that wasn't explicitly in the book, because it was written before Trump got elected, is that we may see a lot of Baas because of crypto and digital assets. meaning, companies that want to offer the crypto products, the digital asset stuff, and will need Baas providers there. Maybe that is an area that we will see some growth if there's VC funding there. And I don't know, I haven't thought of who would get involved, but as we are discussing, I thought of this possibility. What do you think, Barb? I see you smiling.
Oh, I think I know better than to touch what's going to happen in the US. It's your prediction with a 10-foot pole. But I think, banking teams out there certainly should be thinking about what their risk tolerances are, is because the landscape is constantly changing around them. Again, the regulatory, landscapes may very well be changing. What does that then mean about their own risk tolerance? Because is that risk in their perception or reality going up or down? And does that open up, new threads of business models that they wouldn't have considered before? I think that there definitely are some teams out there thinking like that.
Yep. Great.
So let's I think one of the just briefly go around. What are your opinions based on Baas? Just to sum up, I mean, I'll go first. I think in the U.S. we can't adopt the innovation that's happening in other countries because of the limitations of the environment, business, technology. But we can look to things that we need in the U.S. For to bring innovative services. So I think, and they can feed off of each other. I think that he's pointed out a lot of challenges and risks that also bring opportunity for people and companies to address. I think that's the thing. I think also this book was laid out incredibly well, easy to read, easy to follow, a very complex subject, from the the interchange revenue models to the regulations across the world. Jim?
I totally agree, Stesso. One of the things this book lays it out so clearly. If there had been one more chapter, though, I almost wish it would have focused just on how the model itself, how banking as a service has changed and continues to change the consumer's understanding of banking. And I think we sometimes forget, as we get down into the weeds of all these conversations, that from a consumer perspective, the more banking is available outside of banks, it is forever altering our understanding of banking. And I think that's both exciting and also very frightening for a lot of people. So it's, but 3 cheers, Jason. I think you did a great job.
Yeah, it's a brilliant book. And as you remarked, Jim, it's really a book of what is happening behind the scenes. And as we all remarked, a lot of, if we know a small part of it. And Jason has brought to the light a lot of why the things that are happening behind the scenes are happening that way in the US and in other markets, and what are the complexities, and what are we not looking at when we read the news or even analysis of something that is Baas or smells like Baas. And again, I think it's a brilliant way. It's structured in a brilliant way. I can see me going back to certain subsections as I digest fintech or fintech waves come and hit me in 2025, right? And going back and rereading different parts, and especially the examples. I'm not good anymore at retaining names, but I do retain stories.
Yeah.
So I can tell you, this was a great story when you mentioned Column. I knew the story, I wouldn't have remembered the name. And there's one section where I counted what Jason listed as, hold on a second, it was what you have to, your due diligence, a list of items for due diligence, and they were 7 and major. Um, and I want to close on this. And these are all regulatory challenges, the kind of processes that you have to make sure that you go through, which is like, for example, initial due diligence of your partner, ongoing monitoring and third-party risk management, consumer compliance, IT governance, AML, um, lending related concentration risk and balance sheet management. I mean, it's huge. As Barb said, the responsibility and the understanding of what you're getting in is,
Yeah.
it's not as simple as it may look from the consumer facing side.
Yeah, it's
Yeah.
probably not as simple as it may look for anyone that's not in it, for sure. And that's, probably an excellent starting list on, if you're a bank that's thinking of getting into this space, you should have heads of each of those departments who are then bringing in their own teams with their own specialties in those areas, because you will need them most certainly. This isn't, as others have, during the discussion of this book have already said, this isn't purely a technology problem to solve, no question. And, I think, Jason certainly doesn't make this declaration in the book. He's not declaring the end of banking as a service. But, certainly I think what he's proposing is that there will be evolution of this, model and the participants within. And we'll all be watching with interest as to what that looks like next.
Yeah. Yeah. So I want to thank everyone for participating, both out there in LinkedIn land and my book club members. Our next book club will be Friday, April 11th, and we're going to be reading Customer-Centric Innovation in Finance, Leveraging Human Insights to Drive Product Innovation in the Digital Age by Erin Taylor and Annette Brolis. And so we will be posting that on our page. So if you haven't been following us, you should be following the Fintech Book Club on LinkedIn and get notice and be able to register. So it'll show up in your calendar and you can join us live.
And if you have read the book with us, you can join in a more meaningful way our conversation.
Yeah, we love questions live and afterwards. Very often, the authors are motivated to answer. So that's really great, which is what, this is all about. So thank you everyone for joining today and whenever you're watching the recording. Thanks a lot. See you in April.
Thank you.